Hello, everybody. This is Sri from BizBuzz. What matters the most in your business? Sponsored by MyWorkbelt. MyWorkbelt is a all-in-one software uh, helping particularly service-based small businesses manage their business. Today we have a guest, Craig Andrews. Craig Andrews is a principal ally at alliesforme.com. They're located in Texas, helping being a master in marketing, helping businesses that are having high ticket and high trust items, taking them to the markets. And Craig, how are you doing?
Sri, I'm doing wonderfully. It's always good to see you.
It's always wonderful talking to you. There's always something I can learn from you and in our dialogue, and I'm always enjoying sharing this knowledge with fellow small business owners all around the world. Speaking of the small business owners, so we talked about cash flow and
Mhm.
what is the importance and relevance of cash flow. There is a lot of opportunities in the market. Many of the small businesses that I've noticed that they are profitable, but they get into trouble for lack of cash flow.
Yep.
And what is your observation? Is that the same, or is it a different observation that you have?
No, absolutely. And it depends upon the t type of business in general. And now, this is my understanding. I'm not a financial person. I want to be real clear about that. But the my understanding, the way I digest it, is, business owners get confused when they say, "Hey, revenue is growing,
Hmm.
but I can't make payroll, or
Yeah,
I can't do this." And I believe frequently when that happens, it's because their accounts payable are overtaking their accounts receivable.
hmm,
So their business may be growing and it may be growing profitably,
that's right.
but the speed at which they have to pay their bills is faster than the speed at which they're getting paid.
Well, there's another possibility too. What you
Yeah.
said is fundamentally correct for many of the businesses. But what I also notice some of the times the business owners, when they see cash in the account, and they immediately think of, oh, I can use this cash to invest in buying inventory or buying a building or invest in a new business venture altogether,
Yeah.
right? So what
Yeah.
happens
So
when they do that?
Yeah, and so the inventory that would fall into the scenario that I talked about, but then you're absolutely right about the other two scenarios where you see a big chunk of money. I've done it. You see money and you're like, I'm going to invest in this, and then a month or two down the road, you find out you have more month than you have money. And and that's I think it's a common problem until a business reaches a certain level where they have maybe a fractional CFO in place who can say, hey, here's the money you have you can spend, here's the money that you can't. I remember years ago I worked for a much larger company, and the CEO talked about something called the book to bill ratio.
Hmm.
And he
Okay.
said, he said, think of it as like your checkbook.
Yeah. Yeah.
If your book to bill is greater than one, you should
Hmm.
have money in your checkbook to write the checks. If
Mm.
your book to bill is less than one, then you're about to bounce a check. So the amount of business you're booking versus the amount of business you're billing. You always,
Mm.
if I'm remembering that correctly, but basically it was a indirect measurement of cash flow. And um, And so I think it's a challenge for any business owner. You want to reinvest in your business. Some people, some people will just do distributions. They have some money sitting in the account.
Right.
They see a nice boat that they want, and they take a distribution. Um, and it's funny, investors who are potentially buying your business, when they look at that and say, "Oh, so the boat was a better investment than you reinvesting in your business."
Yeah.
But that's maybe a discussion for another time. But the challenge is just because you have money in the account, it's like the rest of us. If you're
Yes.
running a monthly budget,
Yes.
you know, you have bills showing up at a certain time in the month. And and so you have to make sure, for my, personal budget, this is something my wife and I deal with.
Uh-huh.
Personal budget, we have different bills coming out at different times of the month, and we know how much money we need flowing into the account
Right.
so we can make it to the end of the month without bouncing a check.
Without bouncing a check. Right.
And so, I think businesses have to do the same things. And, some investments may just be absolutely worthy investments. But if you don't have the profit to support that investment, you need to find a way of funding it. If you
Oh,
don't
true.
find a way of funding it, you're going to have a cash flow issue.
Right. This is where many of the situations that I noticed that building a credit history for your own business would be beneficial, similar to that what you built your credit history for personally. Now, there are many lenders that I know, they look at your business credit history and they be comfortable to lend you a line of credit.
Hmm.
So this is the line of credit that you can use it to avoid cash flow choke and driving the business to death. And that is very, very powerful tool available in the market. But we got to be careful, the small business owners. They don't want to chew up their line of credit and not in a position to pay it off.
Right.
And it has to be a cushion that you can use when these kind of shocks in the business come in. An example is when the inventory or one of your suppliers says, "Oh, if you buy this inventory today, or by the end of by the end of the month, I'll give you 30% discount." It's very exciting and enticing that you wanted to use the cash in your account and go buy that inventory, right? I mean, why not?
Yep.
But if you need it, you're going to use it. You're going to save 30% on the inventory, which is very, very profitable or a very lucrative opportunity. But not to mention, when you use the cash in your account to buy that inventory, you have to make sure there is enough to cover the payroll end of the month or end of the week. Otherwise, you're going to have a domino effect, isn't it?
Yep.
So the point is that if you use the cash to buy the inventory, but then you can't pay the payroll, and then people are going to be frustrated and they see the inventory coming in, they see that, hey, you are paying, you're using the money, but I can't get paid and I'm having trouble at my home. They quit, they go do something else, and the morale goes down. They behave bad with your customers, and the customers are unhappy, and then you have to pay extra money to make the customers pleased and make the employees pleased. And to make up all these things, it's going to be a monumental challenge. It's not just simply money, it's also the morale of the organization and frustration, and all that negative energy eats up the profitability.
Yep. Yep. Absolutely.
So, in your observation, is there anything that small businesses can do in respect to the marketing or anything to prevent from having a cash flow choke points?
Well, I'm going to give the same advice I would give somebody who's working on their home budget. You
Right.
know, you and I think all of us know how to make a budget for our homes. Hopefully we do. If not, there's this guy named Dave Ramsey that makes it super simple. And you don't have to pay a high price CFO to teach you how to do
To
that.
teach you how to do that. Yes.
Um, so if you're struggling, go look up Dave Ramsey. He'll show you how to make a budget. The budget for the business isn't that much different than the budget for home. Add up all of your expenses through the month and just figure out how much money you have after that you can put into investments. And so, I mean, I'll give an example. I've been doing a lot with AI. I think as soon as it's possible, it's not presently possible. People should go out and buy a fairly, probably about $5,000 Mac Studio to
Uh-huh.
run an AI agent on.
Yeah.
Well, look at your revenue coming in on a monthly basis. Look at your how much you have outgoing. And if it's less than $5,000, that means you need to pause and say, okay, how are we going to finance this Mac Studio?
Right.
Maybe what we're going to do is we're not going to buy it today. Well, you can't buy it today. So maybe when the inventory comes back, and that's just for those that don't know, go to Apple's website. If you try to buy one of these computers, they're going to tell you, place your order. You'll see it in like 3 months. Um,
Pre-order.
yeah.
Yes.
And, but if you don't have that 5,000, let's say that you have a thousand. So then what you do is one option is you start stocking away that $1,000
Right.
a month. You put it somewhere where it doesn't get spent
Yes.
so that 5 months from now, you have your
You
five
have
thousand
ability
dollars
to
to
buy
go
them.
buy your Mac Studio. The other option is you can say, you know what? I think this will improve my productivity that will pay for itself faster than 5 months.
Mm-hmm. Yes.
I would hope so. I would hope any investment that you're making in your business pays you back more than you're paying into that.
Indeed correct.
And so in that case, you may want to take a loan or a line of credit to buy that. If you're like many business owners and you really believe it's important to your business, maybe you put it on your personal credit card and you
Yes.
figure out, but that's the basic choice. You either take part of your monthly profit and put it away for investments, or if you're convinced that this investment's urgent, it's necessary, or it will have such a high ROI that the ROI outweighs whatever type of interest rate you may be paying,
Mm-hmm.
then find a way to finance it.
Now, that's actually a very interesting point you brought up. When you are buying an equipment like that, either you put it away a few months and then buy using that. But if you really, this is where actually the power of point that you're making here. If you feel that the equipment you're buying will outweigh the cost of the capital, then go borrow it and be able to use it to produce the additional revenue and additional profits to take care of it.
Right. Yep, absolutely.
That's
So,
great. No, that's great. Thank you very much. So, if those who are listening to it, cash flow is extremely important element to pay attention in your business. It's not just simply profitability. Now, one of the ways that I know that you can improve your cash flow or not get into a choke point is if you're offering terms, let's say your invoices are on net 30 terms and you're paying to your vendors on net 45 terms, or vice versa. You invoice to your customers on net 20 terms and you pay your vendors on net 30 terms. That way, you have more money coming in before you are obligated to pay your vendors. That's another simple technique that you can apply for avoiding being in a cash flow choke point. So hopefully you can take these techniques and apply in your business and be able to grow and thrive. If you have not subscribed to us already, I highly recommend you to subscribe to our channel and please share this video with somebody that can take advantage of all the concepts that Craig and I are discussing in these videos. Craig, thank you very much for joining me today and much appreciate your time.
Sri, it's always a delight. Thank you for having me.
Excellent.